Hello and welcome to VC House. Let me introduce Bas Godska uh, from Amsterdam. He is managing partner at Acrobat Venture, and we are talking with Bas today about his fund and his secrets. And so, Bas, at first, can you tell me about your fund strategy?
Hello. Thanks for having me here, Acrobator Ventures. The strategy is simple. We invest in Russian founders worldwide. We noticed that PayPal, WhatsApp, Google even, they all have one thing in common. They have Russian-speaking founders or co-founders. But there's a lot of unicorns in this region, and Western VCs in the early stage have an issue accessing the market, and often founders also don't yet find their way to the West. You guys do great work building those bridges. So do we. And I, as a Dutchman, came in 2008 to to the CIS to Moscow at the time, and I was the only foreigner in Moscow in my tech sector and in my marketing role. So I was very impressed with the intelligence, the education, and the resilience I saw among founders. But there were no people investing, so it was very easy to become the number one angel investor. At some point, people saw that I already had 10, 15, 20 startups that I invested my savings in, and they said, hey, why don't we just give you some of our money to invest? So that started to become a process, and that one was organically logical that it should become a fund. So we incorporated a Dutch fund last year in the Netherlands, registered with the central bank and everything, and it became an operator-led fund that adds the fact that we have a lot of follow-on investments from tier one VCs around the world with our 15 people strong growth hack team to help with the marketing, with our PhD AI people in the team, venture partners that help with the tech side, and my 20 years of having been a founder myself, building a market leader in Russia. So that all combined makes us smart money, execution driven, and we love to also benefit from the arbitrage that we go as the only Western fund in early stage with feet on the ground. We go into whether it's Kazakhstan, Belarus, Ukraine, Russia to speak with the founders on the ground and see if they would like to move part of their business development and headquarters to the West and get to Silicon Valley valuations.
Interesting. Really, yeah, I hear it for the first time when the foreign fund, I mean, not from CIS, yeah, invest just in CIS startups. So it's really interesting. So let me just know more. Are you industry agnostic or not?
First, I would like to add one thing. We do not necessarily focus on the CIS region. We were investing founders worldwide, as long as they're Dutch or Russian speaking. So for us, it's
Okay.
literally if the Russian founder is in Berlin, even better.
Okay.
Or in
Okay.
New
And,
York.
and
Yeah.
and do you have more startups in Europe or in US with Russian-speaking founders?
Well, of course, there's a technical difference in the sense that the majority of deals is done with Delaware C Corp, but then still the R&D is perhaps in the CIS countries, and the founder is Ukrainian or Russian. So if you'd say in Europe, I would say the minority of our deals is in Europe. For instance, the new fund, 25% is Dutch startups, and the rest is Russian and Ukrainian with Delaware structures. In the older fund, I don't have the numbers ready. The 20 deals we did in the past, it's UK, Netherlands, Russia, Ukraine, Kazakhstan,
Okay.
US.
Mm, okay, interesting. So, but are you industry agnostic or not?
Oh yeah, sorry. Yeah, good question. We are in a way industry agnostic in the sense that anywhere where we can truly add value to growth as a growth hack VC, that is where we can deal. Let's make it more specific. If you are a business that generates leads, it doesn't really matter what category you are in to have a landing page and use Google or Facebook or Instagram or email marketing to get people to your business. So anybody that uses the internet and could become your client, that vertical we would like to add value to with our team. So I would say there's a few sectors we do not invest in. That is cryptocurrency, that is gamble or adult, that is biotech, and that's IoT, Internet of Things.
What about hardware?
Hardware, we're not. That's IoT. I would say we're
Ah,
not smart. We're not smart enough for hardware. So
okay.
yeah, I did two investments in hardware that both were really fun, but I couldn't understand how to add the best value except for the marketing side. So we would really always like to have answers to questions of our founders. And with hardware, I recommend them to talk to hardware VCs. It's a whole different ballgame.
Okay, so it's very typical probably for VC not to invest in hardware. Uh, okay, what about stage? At what stage do you invest? Or
From
preferably?
pre-seed to early Series A.
Okay, uh, so do startup need to have revenue? If
We'd love them to have revenue. We have an official barrier of saying about $30,000 a month. However, I, as an angel that has been investing so often in pre-revenue or with a small revenue, I always tend to already stay in touch, already follow the development. And if I see that somebody is already having a product market fit or some $10,000 revenue a month, if we see a nice growth, then we all definitely will already start the discussion.
okay, what is your personal opinion about investing in pre-revenue startups?
Well, it's a bit like children. I don't have children myself. I have two cats, but I consider startups in the beginning children in the sense of the word that the not all experience and skill sets are available. There is an element of unpredictableness. So if a big new B2B client comes on board, maybe the entire financial model is unclear. I've seen so many startups have a pivot. So I don't believe that the normal KPI driven Excel spreadsheet that you learn in business school is really applicable to this pre-revenue or pre-seed or seed stage entirely. So you need to have this entrepreneurial creativity, flexibility, and understanding. I've been there in the past. I've co-founded the company when we also went from 0 to about 500 people. And I know how hard it is for a founder. So pre-revenue, for me, that is where serendipity and a bit of the spark in the combustion engine to get the engine started is already driving my interest. I even like pre-revenue or narrow revenue companies best because you can still add so much worthwhile practical hands-on information that will immediately create a triple digit growth because those are the kind of obvious facts. And then after year one or year two, it's more about business process optimization and the growth hack that you apply, it will bring maybe 10%, 20% improvements. So it's not that lowest hanging fruit anymore. You get very different problems then about scaling.
Interesting. And would you recommend to business angels to invest in pre-revenue startups? Or you would tell them to invest later? What is your opinion about it?
Um, I would say if an angel understands that they will not allocate more than 5 or 10% of what they have as free disposable investable money to angel network investing, that's great. Second, if they have added value that they are a niche expert in a particular field where they can definitely have a finger on the pulse for this startup and add tremendous advisory value, then that could make the exception possible to work with pre-revenue. If you get a really good feeling about the product, the team in its current stage or in its future stage, that is great, but do diversify. So I would say if you really want to make the angel investing lifestyle, go for about 30 different investments. And then you will have to already immediately know that 60 to 80% of them will die. It's not going to be fun. But the other percentage will completely be the dragon, the one that brings back the entire value of the portfolio, or even a unicorn that will be the outlier. That's all basic knowledge. There's a cool book about that from Jason Calacanis, Angel, you know it, or even Brad Feld with Venture Deals. Those are lovely books to read about this. But I think an angel, and then I summarize, should just love what he's doing or she, and at least spread their cards wisely. Pre-revenue or revenue, that's already a second question.
Okay. Thank you for your opinion. And what are the checks which you usually write to startups?
We do from 100,000 euros up to about 750,000. That's the first check. And after that, we allocate up to 3 million euros for follow-on in the exceptional um, performers.
So
Mhm.
it's usual that you follow the next round as well, yeah? You invest in the next round.
Yeah, yeah.
Yeah. No.
However, as a fund, we are fairly young in the second fund now. So the first fund had a lot of interesting insights that we did 2 years of reevaluating what works, what doesn't. So we fine-tuned the strategy, had a lot of key learnings. So for this portfolio allocation strategy of the new fund, it's all a little bit different. I would say very roughly, and don't quote me on this, but about 1/3 would be initial checks, 2/3 of the fund would be follow-on. But we also use special purpose vehicles, deal by deal. So it is a whole mosaic.
Okay, okay. So it's a lot of
My
different
partner,
options.
in the funds, he's in Amsterdam, Joachim. He is very good with Excel, and he made all these very difficult financial models, how we are investing per stage. So that is all in our pitch deck, etc. But for me, my job is more to source the deals that, with my 20 years of knowledge, I sense that the founders can definitely make a difference, and then add
Mhm.
the team to it for growth.
And so you have one co-founder or partner, I would say, yeah? So it's
Mhm.
two of you who manage the fund.
Yeah. We do have venture partners, we have venture scouts, we have a big team of advisors. Some of them have founded their own unicorns. Um, that's that's our team. So we are pretty lean. We have a few dedicated staff that help with the deal flow and analytics, or even now with the fundraising, and with our content marketing. So just like a lean small fund. Shoot.
Okay, so let me uh, ask you something interesting. Uh,
This was already very interesting.
Besides it, what is the age of your fund?
This one was launched last year. So the first fund was 10 years ago, and the
Wow.
second, yeah, vintage 2010, and
Mm-hmm.
this one is vintage actually 2020, you could say
Uh,
normally.
10 years, it's really, yeah, good age. And in your opinion, uh, what can you tell about the experienced VCs? How many years you think the VC should be in the industry after uh, which you can say this is experienced VC?
I would almost say that I think the era of operator-led funds has definitely arrived. It is a well-known fact that emerging funds perform better than most of the actual existing long-term funds or second, third time funds. So I would say that if you have operator knowledge, that you have been a founder or you are great in tech or great in marketing, and you add to your team people with a good venture background, then that would make me more enthusiastic than just the fact that somebody has been in a fund for 5 or 10 years. Maybe for Series B, C, that is where the other type of deal making is done. But we, as an ecosphere, we create the value in the pre-seed, seeds, and early Series A stage, way more by understanding what it is to be a founder than to understand the nitty gritty and technical tricks of a good VC.
Okay, great. So, how many startups do you have today in your portfolio?
25.
25. And which do you like? I know that this is not an honest question, really, but which one do you like the most?
Oh,
Or maybe tell us about if you already have exits.
yeah. We did a few exits. One we sold to a Russian company for a small amount. Then we had one which was a partial exit, was a Ukrainian company we sold in a mix of equity and cash in a Series A round. That's beautiful because that company that acquired this one, the stock that we have in that company is growing also very rapidly. We did a partial exit in a very large company where there was a possibility to sell something back in a Series B. And we could have done a lot then. I think we received about 25 million euro offer exit, but we said, no, we're not going to take it because we believe that this particular portfolio company can still grow. And luckily we did, because it grew big time since then.
It's still growing. Yep. So, and you're going, this startup will be a unicorn. Yeah.
It is already a unicorn.
Already a unicorn. And you invested on which stage in this startup?
Very first stage, like seed.
Seed. Oh, great. Sorry, really, my congratulations, because I really like the funds which can catch a unicorn and at the very early stage, because if you just bought it at the valuation $500 million and then the startup became a unicorn, you don't need to have so much brain. Yeah. So it's not hard really, but it's hard to find the unicorn on the very early stage. So
I
yeah,
agree.
my congratulations.
Thank you.
I hope it will be a decacorn maybe.
Yay. It's on its way.
I wish you that. Okay.
Thank you.
Great. And if you go to university, there is no such profession on undergraduate studies, yeah, as VC. So how it happened that you became a VC? What was your motivation to become a VC?
It's interesting that when I arrived in Russia, I was the deputy CEO and CMO of Ozon that did their IPO on NASDAQ yesterday. And that was a big culture clash. And as I already mentioned before, I noticed that there was a lot of talent in the market, but they lacked the knowledge. So there was a 5-year roughly gap between the Western knowledge. I used to be a chief marketing officer for Orbitz.com, which gave me the luxury to test in the West with a $100 million budget in 13 countries how to apply the right marketing methods. And when I came to Russia, I noticed everything was 5 years behind. There was no retargeting, affiliate marketing was in its infancy. So I had all these, like the Russians say, kazirные karty, those joker cards that I could apply. So of course, as an entrepreneur in my background, I loved to give advice. My dad is a teacher, so maybe I have it from his genes. So if a startup asked me like, hey, what should I do? I had this interesting, or have this interesting formula called Cash Cow Bomber. And every character is one particular growth hack method with actionable tasks that are quantifiable by financial impact and speed of implementation. So at the end of a session, I would pick from about 300, 400, 500 tasks that I have as some sort of encyclopedic knowledge that they would work for verticals or wouldn't work, etc. Those ones that I accumulated over 17 years or now 20 years of time. At the time, I would share that with the startups. Then at some point when the desire was there to use more of my time, I couldn't do it because I had a 72 people team in Ozone and my hours were short. But of course, I wanted to help. And of course, I'm also a good entrepreneur. I said, well, I'm not going to do it for free. So startups said, here's some advisory equity. Then when I really looked in the kitchen of the startup, there was not longer the flirtation of funding or whatever. I was really helping them on a practical level. I enjoyed what I did and I understood, wow, these guys or girls are cool. They do a wonderful founder job. I would have loved to be a founder if I had the time. You know what? I will put some of my savings in. So that's why organically your angel investment behavior grows. And it became a mix of getting advisory role. Then if I liked what I saw, put some savings in there. And then the time came, and this was already after, I think, 15 investments, that some people said, hey, we have no clue what you do, but you keep bragging how great the results are. So can we maybe put some cash in and do what you do? So I thought about it. I was until then a lonely wolf a bit, in the sense that there were not that many angel investors around, or if they were there, they were in a different group. So I always did it on my own. And then I said, well, okay, let's try. And then exactly the two that I tried with them, one Dutch HR tech company and one Russian American company, they grew so aggressively that those people that actually invented venture capital in the West, they were now in their 70s, they said, Bas, in our entire career, we have not seen what you are doing here in tech. It was crazy. They received an exit offer 6 months after they put money in. It was tens of times higher than what they invested. They said, Bas, this is crazy. So we were going to call our friends. And all of a sudden, there was an in crowd of people that, based on trust, put the first layers or foundation to my finance activity or my investing activity with other people's money. And then to answer your question more shortly, I had to make the decision whether I'm going to be just this broker to say, hey, here, talk to the startup, or should I be a grown-up boy and create a fiduciary obligation structure? At some point, I was doubting for a while, and I said, you know what, I'll set it up as a Dutch fund because it's chic to pay taxes and it's chic to be in a very transparent and well-regulated environment. Let's forget about all these exotic Cayman Island structures. That's old school. This was also a desire of the investors. They were all very visible, famous entrepreneurs in the Netherlands and unicorn founders, etc. So, well, then I made it. And actually, it is like building a little bank. It's so easy to say to people, yeah, I'm going to set up a fund. It's like people in a pub saying, yeah, I'm a photographer, or I'm going to write a book. But it took me 2 years and tens and tens of thousands of euros and thousands of hours of paid advice to get all this paperwork and compliance in order. It's like building a small bank, but now it's done and it's regulated and it's cool. And we're closing our upcoming round very soon. And we're already operational.
Great, really
We
great.
already invested in 4 companies so far. We're nice in our diversity. 50% of the startups we invested in with this fund are with female founders or co-founders. And in my private 6 or 7 deals I did this year as an angel, because it was too small for the fund, I think 3 or 4 are with female founders or co-founders,
Mm-hmm.
and they're all doing great. So it's definitely showing that the gender gap should be closed.
Yeah, I've heard on TEDx probably uh, one video, and the woman professor made a research about
Yeah.
women in VC, and she discovered that they really underfinanced, so it's much harder for the women to raise funds, and probably you know it and use this secret. Okay, maybe you can tell us other secrets. What is your secret? How to be a successful VC?
Hmm.
Because probably a lot of people in our community just start to investing, and you can tell us something interesting.
Okay. Well, firstly, I have a master class in which after analyzing my 10 years of angel investing, I put it all in a presentation. So that is something where I have it in more detail. But to lift the tip of the veil or the secret, I would say that you firstly, I mentioned already a few elements, right? I would say firstly, diversify, make sure that you do not go in this on a one-off little angel investment deal. That is going to be a guaranteed failure. So ideally strive that your 5 or 10% of your money that you allocate to angel investing, spread it over 20, 30 startups. There's this, Google this Monte Carlo simulation. It shows you that the deviation standard is getting closer to zero when you get more startups in there. The chances of one becoming a unicorn becomes bigger, and the chances that you've put all your eggs in one basket gets, of course, smaller. So that's one thing. I would say don't fall in love with a product immediately and just invest blindly. Always take a little bit of time out to think, maybe talk to co-investors, do your legal due diligence a bit. So be careful, but also straight away say goodbye to the money you invest so that it's not going to be a big problem when it's gone. In my portfolio, I noticed 4% of the capital is gone, but normally it's like 50 or 60% of the capital or 9. So I've done something right. I guess the whole cash cow bomber methodology to check up the growth strategy prior, that is a definite risk mitigation that not everybody can have. Find your own secret in the sense, what is your superpower as an angel investor? Are you amazing in finance and can you help the startup with their financial planning or their preparations for a good financial plan or forecast? Help them there. If you are cool in hardware and that is where the startup is, help them there. If you are having no idea about the startup, sometimes that could be good that you are in a pleasant way naive, that you wouldn't see all the problems that would probably normally appear. And then you can fight yourself through those troubles together with the founder when they come, because you both didn't know. But maybe if you would have known, you wouldn't have ever invested. I know one of my advisors, my mentor, he's a billionaire, and he didn't know anything about mineral water, but he understood that in the former Soviet Union, it would be good to use a household brand mineral water. So he bought the factory. And he said, if I would have known as an experienced person how difficult the water business is, I would have never done it. But I'm happy he did it. He sold it for hundreds of millions later on to a company. But so you have to have a particular level of naive in it, which is not an advice. But if it's there, it doesn't always hurt you. I would say if now a startup would come to me, hey, I have an e-commerce idea. I want to move parcels from A to B. I would maybe say, oh my goodness, I've been in so many e-commerce companies. Come on, find something more scalable. You don't need to build those warehouses somewhere in the CIS countries and all these returns. Why would you want to do it? Create something fun that is straight away shooting off to the sky on a server, not with its feet in the ground. But that's what you learn about. Is that enough secrets or?
Yes, I think, yeah. You have a secret. We
I
have a
could
secret.
go.
Now we have a secret from you.
Yeah.
Okay, so it will be interesting to see the results of your investing. I
Mm.
mean, you said you have a presentation, so if you can send us after this, it will be good. Yeah.
I can give you the numbers of the first fund if you like.
Yes.
The internal rate of return unrealized is 88%, and the TVPI is 13.3x.
So IRR is 88, yeah? Am I
Yes.
right?
Yeah.
Wow.
The
This is great.
TVPI, that's over a period of 10 years, and the TVPI is 13.3. The new fund that only started in January is at 1.5 now. People that still want to invest in the fund, they enter at cost, so they actually already get a nice benefit.
No, really, it's really great results. My congrats.
Thank you, sir.
You now can raise a lot of money for your new fund.
Well, Corona was a bit tougher, so we paused our funding, fundraising, but now it's going really well. In the last 2 days, we had 2 unicorn founders agreeing on investing in our fund. So that's
Good. And probably maybe the last question for today. I know everyone has mistake make some errors, yeah, in the process of investing. Which maybe 1, 2 errors you would recommend to avoid to young VCs?
Yeah, I would say that if I would have, although I have a legal education, the whole nitty gritty of legal contracts, also for founders, watch out. There's all these VC things like preferred liquidity and watch out what you sign. If I would have known those tricks and I would have wanted to apply them, then probably the returns of my angel investments would have been way higher. The companies are now worth close to $4 billion, which they were all peanuts when I invested. So, of course, in this huge growth trajectory, I diluted a lot that I could have here and there prevented. So now I would say that the money that we have in profits or exit offers is many tens of millions of euros for the first fund, but it could have been over 100 million. So it's good to not be too small thinking about checking your details in legal. Luckily, we did this gradually, but the very early days, I didn't do that. So that's good to pay attention to. Learn to see orange flags and maybe accept an exit offer early when you see that there's things maybe going wrong in the leadership, instead of keeping that dream. I had one startup that I invested in at a 2 million valuation. They went all the way up to being the favorite startup in the nation with $50 million valuation. And I received an exit offer at some point, but I thought, well, this is going to grow and grow and grow. And then the next time it was at zero. So I lost. It wasn't a great amount that I invested, but still, it was a good lesson to nobody ever got poorer from profit taking. But it's very ambivalent because at the same time, I said no to earlier this year, as I said, to a 25 million euro exit offer. And I did well. I mean, at the time, I would have been very happy with the cash, but now I'm happy that it's a multiple. So you could also think afterwards, damn. So I would say go for partial exits now and then. It's also good for your track record as a VC. We did a million exit offer, accepted it, I think, earlier this year in March or something. You didn't know what's going to happen with Corona. I would say more constructively on the, and that's my last answer, is that on the deal-making element, do feel that this is a fun project. Do feel that you have a click with the founder. Watch out for professional startups. Those could be those extremely polished presentations with the biggest advisors on board. They check all the boxes in the logos, the ethos, and the pathos. They are sympathetic. They have all the scientific facts. They have the credentials, but in the end, they will go from competition to award to prize. But where's the real product? Where is the real business building? You may want to invest in an introvert that just sits in the basement and builds a beautiful product instead of somebody that's every week on stage at some startup contest. Where's the time to build the product? But
we have
you can do the best of both.
on Unicorn Cup. Unicorn Cup.
That's an exception. The Unicorn Cup, that is smart founders. They definitely know where to be in the right spot.
Okay. I mean, we had a discussion about introverts and extroverts. Yeah,
I remember
invest.
that.
Yeah. Okay, Bas. Thank you very much for today's interview, for your advice. I hope it will be useful to our community. And see you next time.
See you, Alexander. Bye-bye. Have a good day.